Hello, what's going on, everybody? Can I get an audio and visual check in the YouTube chat? How are you guys doing, everybody? Good afternoon, good evening, good night, depending where you are in the world. Can you guys hear me and see the screen? On your screen right now, you should see breaking news to the left, as well as the trading view charts with all of your equity markets, your stock markets here. The audio is low. Hello. Let me fix it should be good. Just make sure everything's good before I start talking about the markets. All right. No talking about social media shit because markets are open. That means it's time to get to fucking work for us. Pardon my language. But welcome to the Capital Hungry New York market update stream. We are going to be looking at what's impacting the markets fundamentally, as well as doing technical analysis to lay out some potential intraday trade ideas on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and US30. Okay, so before we jump into it, I always like to give the reminder that as manual retail traders in these vicious financial markets, we have to stay as emotionally neutral and controlled as possible and focus on the long-term vision, keeping emotions out, sticking to our trading plans, and following our risk management plans like a religion. Okay, I always got to give that reminder. This isn't a live trading stream. The live trading stream will be done at London session where we do our scalping and stuff. This is a market update webinar just to keep everybody fresh and up to date with what's going on technically and fundamentally, and lay out some potential trade ideas for people to follow as well on their own accord if they wish to, right? Now, you should see some key fundamental points, some macro fundamental points that are going to pop off on your screen like a little TV screen here, okay? And I'm going to explain what this stuff means. So what we have to understand is markets and investors overall are still very optimistic on economic rebound and continued economic growth after the pandemic crash and all of that fear has been priced in, as investors are riding with the support of the central banks who are flooding the markets and not letting it go down. We can see with our global stock markets across various regions, which I'm going to show you guys, is that global stock markets are bullish across the board due to investors pooling money and riding with the central banks who are obviously flooding the markets with that cash flow, okay? So we have to understand that we can play this market optimism, and when investors are optimistic, this has an impact on trading instruments we trade that we can obviously take advantage of on our currency pairs, commodities, gold, etc. All right. The continued focus economically in the markets has still been on the vaccine rollouts and distribution. All economic recovery for investors has been tied to central bank support, but more importantly, to come out of the pandemic, it's linked to the distribution and administration of vaccines overall around the world. So ever since we had the pandemic crash, March 2020, and then the Federal Reserve, respected for the US, and other central banks started to jump in and flood their equity markets and flood their economies with stimulus support. For example, in the US, you got stimulus checks. In Canada, it was CERB. In UK, it was the furlough payment scheme. You guys get what I'm saying. That all came from the central banks, right? Ever since then, we have not had any fear, uncertainty, or doubt that has been as strong as the initial pandemic fears March 2020. We've only been optimistic with little blips of fear that doesn't change overall market structure on our risk currency against safe haven pairs, is which we're looking to take advantage of, okay? GJ did have news, Tony, but I'll be talking about that. The GJ news is because they're opening up. Yeah, but anyways, we'll talk about that. So let me get this out of the way. So what I mean by this is, when you look at and understand what that market optimism means and investors are optimistic, you can notice that your global stock markets are bullish and your safe haven currencies are bearish, or your fear indicators are bearish, meaning investors are taking money out of the safe haven currencies and pooling it into more riskier and rewarding investments coming with the equity markets, or our risk currencies riding with the central bank support. Okay, we can see that we have been primarily looking at and playing that US dollar weakness, Japanese yen weakness, and also noticing the volatility index is bearish, showing us that there's minimal market fear, and showing us when we're trading any pairs against the dollar, fundamentally we have a more bullish sentiment on those pairs. For example, GBPUSD, EURUSD, XAUUSD, like, because we do trade gold against the dollars, what we traded against, right? We have been more bullish on these pairs and bearish on pairs like USDCAD, playing that optimistic market sentiment. Because the trade-off that the Feds have done is for the Federal Reserve to increase their money supply and flood the stock markets with support and flood the US economies with support, right? You can see that this has led to an oversupply and an under demand of the dollar, which decreases the value of the dollar. So let's look at the dollar standalone here. You can see the same time, March 2020, the same time the markets initially crashed, we had this upside move. Then the Federal Reserve started to increase the US dollar supply. Money printer go burr. If you guys know the meme, that's what it means. Federal Reserve started printing more dollars. It's not really printing, that's just what they say. It's all digital. It's just editing a digit. You know what I mean? But you get what I'm saying. The Federal Reserve started printing more dollars to take that US dollars and put it into the US equity markets, put it into helping the US corporations, the US government, the US economy through bond purchases, the US stimulus, ETF purchases. And what that did is heavily decrease the value of the dollar standalone. High supply, low demand, decreased dollar value, right? And you can see the US stock market has been bullish ever since that crash, with the flood of the US dollars going into the equity markets to support it, and investors also riding that. So that's just what I mean about understanding the market sentiment. But from an intraday perspective, what we want to understand is we are playing that US dollar, Japanese yen weakness, as they are the safe haven currencies. And we have been playing our risk currency bulls. So now let's look at GJ. Ever since the pandemic crash on GJ, we've only been respecting higher time frame bullish market structure, with buyers continuously printing new highs and having profit taking that creates pullback phases and continuing to extend into new highs. When you have bullish market structure technically, right? When you have bullish market structure technically, there's only two ways to observe it technically to have a continuation to the upside. Either you have a push up, a consolidation in liquidity zone to get more order flow in the market and a continuation to the upside, or you have a high printed, a pullback phase as you have profit taking from that high, which creates a pullback as sellers come in to relieve the buyers out of the market from that supply area, push price down to a more favorable demanded price, a demand area, then continue back up. So when you look at GJ, when you look at EURUSD, when you look at EUROJPY, when you look at AUDUSD, AUDJPY, NZDUSD, NZDJPY, you're going to see this exact same essential macro structure, which is telling you the fundamentals are valid of that market optimism with the weaker US dollar and the weaker Japanese yen because they're safe haven currencies. Investors, institutions are not pooling money into the safe haven currencies during this time, which would weaken the value of those safe haven currencies. It's going into the equity markets, the stock markets, the risk currencies. They've been riding the GJ buys since the market crash. And if you've been riding the GJ buys ever since we hit those historical lows, or on any of those pairs where you have a risk currency against a safe haven currency, Why would you want to end this greed train? This is pure financial gains. So with that being said, what I want everybody to understand is when we start to look at, so GJ higher time frame bullish, technically bullish, fundamentally bullish. Here, this was the previous high that was printed. You can see we had this high printed, and what did we have? A pullback phase. As buyers take profit, we fail to break the previous price sensitivity areas. You create a higher low and continue up into new highs. You would have to break below 149, which is the last higher low area that extended into a new high, to have a technical break and say bullish structure is broken. Otherwise, all GJ has been doing, as we've been in a bit of a range, is just creating a higher time frame consolidation zone after peaking new highs. Remember, the market can move in two ways as you're continuing up. Push up, pull back continuation, push up, consolidate, don't break structure continuation. GJ has been doing both for 8 months now. No higher time frame sells, no reason to sell at higher time frame. You only have pullbacks as buyers take profit, sellers relieve them out of the market, and then you come to a more favorable demand area and you just continue right back up. You're going to see this exact same structure on GBPUSD, EURUSD, EUROJPY, NZDJPY, NZDUSD, AUDUSD, AUDJPY, CADJPY. You get what I'm saying? USDCAD. Now, USDCAD, what would USDCAD look like on the higher time frames? Because US dollar against the Canadian dollar is your safe haven currency first. Well, it's going to be bearish, because the US dollar is the primary and it's been fundamentally weaker. Canadian dollar is the risk currency and it's been way too bullish, as are all of our risk currencies are. As global equity markets have been bullish, and you had those risk currencies get bought up from those lows. Right? Also, if you know, the Canadian dollar has a positive correlation to crude oil, because one of Canada's main revenue sources is the exportation of crude oil. The higher cost per barrel of crude oil, the more revenue Canada brings in on each barrel sold. You get what I'm saying? So that's a good fundamental confluence as well. When crude oil is very bullish in structure, technically and fundamentally, you could take a look at it. It's like $60 a barrel right now. The Canadian dollar will have higher probability of being stronger as well, because investors tie together that economic concept of how Canada brings in that revenue from oil exporting. Okay? So anyways, let's look at GJ here for intraday analysis. So, is there any reason for us, with what I'm telling you guys, as we've had continued Brexit optimism, the Bank of England still has potential support, right? The Japanese yen has been weaker technically by itself. When you look at the Japanese yen on the JXY index, you can see it's just been in bearish market structure. Standalone, it's still very bearish, right? The US dollar's bearish. Is there really any reason to sell GJ? Even when these plays have been happening, we have not really sold GJ. We might have taken scalps, taking advantage of the pullbacks, but we just wait for price to come down to a favorable demand area and start scaling in buys back to those previous highs. Do you understand? So when I'm looking at GJ now, I'm seeing that buyers have printed a new intraday high above the previous high point, right? When we're looking at the daily time frame, extremely bullish. What I would be essentially looking for is now marking out some areas of interest where this is a nice liquidity zone where we had an upside move, and this is the previous high. Okay? What I'd be looking for now on the new daily candle setup, possibly through Asian and London overnight, if the next hour and a half we have a very solid bullish daily candle close like this, is a retest of those previous highs in a lower wick formed and a continuation back up. If we break back below those previous highs, I'll expect a deeper pullback to retest this liquidity zone and then a continuation back up. I would only be looking for safe higher time frame sells if we broke that last higher low point at 149. Otherwise, capital hungry members will tell you we scalp those pullbacks and take advantage of that momentum when you have that profit taking happening by buyers, because the market moves in waves. You're not just going to continuously be pushing up, but with understanding the fundamentally and technicals, we've been playing that market optimism. You've had that flood of support of the central banks. You've had the weakness in the Japanese yen as a safe haven currency. You haven't had any reason here to long-term sell GJ. You just have to patiently wait for the breaks of the previous highs or the pullback to a previous demand area and just continue right back up. Okay? Now, what I do want to be mindful of on the higher time frames is this bearish market structure we're starting to approach here. Because these aren't just some random points here. I want to be mindful of the potential fundamental catalyst we might get here. Okay? Because what happened here that caused this massive sell-off? What happened here that caused this massive sell-off? 2008, what happened that caused this massive sell-off and our safe haven currencies to increase in strength and our risk currencies to weaken, stock markets to weaken? What was it here in 2008? It was the 2008 financial crash, right? So that was the fundamental catalyst that caused this massive sell side move to these historical lows. Okay? Then years later, you had this economic recovery. 2 to 3 years later, then this upside move on GJ as you had the historical lows be bought up and economic recovery years later. Then what was this 2015? Brexit, exactly, right? Took us down to, but what you want to understand is that took us down to these same historical lows and failed to break. This right here was the pandemic. That one candle right there. Look at the impact of the pandemic compared to Brexit or the 2008 financial crash. It was almost like it was controlled in precision just to bring price down to these historical low demand areas, and then the central banks and everybody jumps right back in. You get what I'm saying? Think about the size of the impact on the market from the 2008 crash, the size of the impact from Brexit, and then this was the pandemic, which absolutely shook the world, but financially it seemed like it was just a straight setup move. Just to set up, fuck the middleman, fuck the regular worker and the middle class citizens of the world, stomp back on them, do an economic reset. Because if you notice, all pairs, risk currencies against safe havens, pushed to a historical low point, didn't break, and then instantly corrected back up. Because of the support of the central banks flooding the markets, everybody jumping into the stock markets. You get what I'm saying? So I'm being very cautious if we have anything come up fundamentally in this area. But once we break above here, technically, we're flying with that economic recovery. Okay? But anyways, I just want to give you guys that quick higher time frame review. Let's go back to the intraday analysis. What I'm looking for on GJ for the new daily candle is pullbacks to these previous highs around 153.2 and continued buys to the upside. If we break below 153.2, I won't touch it, and I'm looking for buys from 152.500. with what I just told everybody, is there any reason to look for GJ sales? Yes, pullbacks happen, but do any of these pullbacks here, even on the intraday time frames, break bullish market structure? You had this high printed by buyers, profit taking happening. You had a pullback here. This was a higher low printed from this previous price sensitivity area. Then from this point, you went up into print a new high. You just have pullbacks that don't break market structure and then continuations up to those previous highs. If you guys followed the last London sessions I did, or the trade idea webinars I did, right? You guys would already be riding these buys up. That's all we did in Capital Hungry. Wait for pullbacks, buys. Wait for break of these little intraday highs, buys. Any Capital Hungry members in here? We're buying from here, the lows from here, the break above here, scaling in above the previous highs. Okay? So now what I'm looking for is a retest of the previous highs, a lower time frame support made, and continuation up. Look at the lower time frame structure as well, how nice it's trending and moving for such a long period of time now. Okay? So if this daily candle closes as is, I'm going to be looking for a pullback to these previous high areas, a technical support formed. You know what I mean? Anything similar to this, any of these types of technical, you guys know what a technical support looks like. And then I'm going to be looking for that support and continued buys to at least go back to 154 and potentially continue higher into new highs. All right. I would only be looking for GJ sells below 150.5, 148.8 if we break higher time frame bullish market structure. Otherwise, I'm only playing those pullback buy options. Pullbacks to previous highs, what I'm looking for. New daily candle. Okay. Now, gold. This is gold on the 4-hour chart. Okay. What we saw happen with the pandemic fear is a massive increase short term in safe havens, because investors are pooling their money to where to keep it safe. So that's the whole ideology behind a safe haven. And we know gold is a precious metal safe haven. But that is not the only reason why gold was so bullish during the pandemic initial impact, right? Remember when the pandemic happened, all global economies at one point were shut down or had borders closed. Gold is a real world physical metal that is bought, sold, traded, melted down, turned into jewelry, used in industry. You get what I'm saying? Just like oil. So what happened was during the pandemic crash, when you had economy shut down, global gold mines shut down, gold delivery and supply chains being shut down or limited due to borders being closed, what is the economic impact to the supply and demand of physical gold? What is the impact on the supply and demand of gold during that pandemic period? What is it? What's the impact on the supply? Is it lower or higher? And what's the impact on the demand? Is it lower or higher? Exactly. Less supply, and supply being limited because mines and production areas were shut down and you couldn't deliver it. But demand was through the roof because it's a precious metal safe haven. So you had an explosion in price into all-time highs at 2075. But then, why did we start to enter this corrective phase in this bearish corrective structure? What started to get reset with the supply and demand of gold? And what caused that reset? Well, months later, you had a flood of vaccine headlines. You had economies start to open right back up. So as economies opened back up, as people got back to work, those supply and demand changes within gold start to regulate again. You understand what I'm saying? So as the central banks are printing money and flooding the markets, as economies are opening back up, as people are getting, as more majority of countries were getting out of lockdown, as all of those gold mines and production facility areas opened back up, supply levels became more regulated, and demand started to decrease, causing this bearish corrective structure. But we still didn't break higher time frame bullish market structure that we retested at 1680 here, where we had this technical double bottom. And there's another strong macro fundamental bullish confluence for gold called the risk of inflation and the risk of hyperinflation. Everything we do in our life has a consequence. Every cause has an effect. Every action has a reaction. Okay? So the reaction of all of this money printing that the Federal Reserve is doing to help stimulate the economy is decreasing the buying power of the dollar and increasing the cost of goods within the US economy. The cause and effect of that massive printing, and the effect is potential hyperinflation and inflation. Do you understand? Hyperinflation, risks of hyperinflation are a bullish confluence for gold because investors start to pool into gold as a hedge method against inflation. Does everybody understand that, or do you want me to walk through that one more time? Let's quickly recap. Gold went to all-time highs during the initial pandemic fear because you had economies locked down and shut down around the world, gold mines and production facility areas shut down around the world. So you had a decrease in gold supply and an increase in demand, where higher demand, lower supply equals a higher price of a good, service, whatever it may be, asset class, whatever it is. Then months later, after we peaked those all-time highs at 2075, we had a flood of central bank support. We had a flood of vaccine headlines and vaccine optimism. Economies start to open back up and phase out of lockdowns. Now, we're not fully out of the pandemic, but we're nowhere near where we were March 2020. That was like people thought the world was ending. So what that did was, as economies opened back up, as gold production and facility areas started to open back up again, those supply and demand levels regulate. The demand starts to decrease because investors are now taking money out of gold and putting it into the stock markets. The supply start to regulate because all economies are starting to open back up again. But we did not break higher time frame bullish market structure even with this corrective pullback. Remember how I was just showing you the pullback phases on GJ, or how the market can only push up into a high, have pullbacks, and continue up in that fashion? Has gold broken higher time frame bullish market structure? The reason for that is because of the impact of that US dollar printing. This is the third phase now. This was the initial pandemic fear I explained. You guys understand that. You guys understand why gold corrected, because the flood of vaccine headlines, economies opening back up. But the third impact now of why gold didn't dig deeper and break bullish market structure is because that increase of US dollar printing has a risk of inflation increases and a risk of hyperinflation to the US economy. Understand? And for investors to hedge against inflation and hyperinflation risks, they go back into gold. And this was a great demand area with those inflation risks to buy up gold from 1680. Now, remember this bullish market structure, because I'm going to zoom more in now, okay? Now, look, this price point 1680 was that retest of higher time frame bullish market structure in a historical key level. Look at the technicals from this area. You have a technical double bottom. What this tells you is sellers exhausting or exiting out of the market and buy orders entering the market from that favorable demanded price. From that point, with the Federal Reserve still hinting at the inflation risks and the increase in US dollar spent and the increase in US dollar printing, we've started to create more bullish market structure, breaking out of this bearish trend and structure, creating this bullish structure on the intradays to play. When you're looking at this intraday structure, it's the same way you would analyze that GJ bullish structure. It's the same way you would analyze that gold daily structure we were just looking at, where you're only having these consolidation phases and pullbacks and break above previous highs and continuations to the upside. Flaku Beats, someone said he's coming for me. Do you guys really think any marketer can come for me with the information I got in my brain? Let's be real here. Come on, guys. With the amount of information and value and actual knowledge about economies, fundamentals, technicals, what can they take from me? You know what I mean? Exactly. So gold, very bullish on the higher time frames. We have those inflation risks. We're breaking above these previous liquidity zones, and we're breaking above these previous intraday price points as well. We can see we're starting to create a support around 1836, but if we break below 1830, I'm looking for a pullback and buys at this 1820s area continuation up, or buys at the break of this high continuation up. We have the US dollar, which is still bearish. We have the higher time frame bullish. We have the Fed still hinting at that they are going to still have room to print and increase more US dollars. And we have the technicals in our favor with those bullish confirms as well, especially when we're looking at our higher time frame key levels here. For the new daily candle, I'm pretty much looking for a pullback to retest bullish structure and just continuations back up above 1836, and if we get breaks above 1845. If we break this lower time frame bullish market structure, which has just been intact for about the last week, then I can expect a deeper pullback to 1800 for better buys from that area. Okay, I'm still bullish on gold. I'm only looking for pullbacks and supports created at these higher time frame key level price points and buys. For example, in Capital Hungry, since last week, we've been playing buys from 1781, 1789, break above previous highs at 1795, 1812, 1820, and that's it so far. So there's no reason for me to sell gold. I'm mainly just waiting for breaks above previous highs and continuations up, or the pullbacks that support and continuations up. If it consolidates, still would buy at the low support and then break of high continuations up. All right. Because remember, we still have all these recent fundamental points that are very much active. I forgot about these economic events as well, but I usually say this at the start of the webinar, but we don't have any data, economic data to impact the markets over Asian session. Obviously, you want to always be paying attention to your breaking news headlines that impact the financial markets. But for May 11th, overnight, 5 a.m. Eastern, we have the Germany ZEW economic sentiment. This is going to be good data, in my opinion, because yesterday the EUROSCENTIX data, which is like a sentiment indicator on economic recovery, was amazing. And that was like a low-key one-star report that still had major impact on our euro buys we took last night. So that Germany ZEW economic sentiment, in my opinion, is going to be solid. At 8 a.m. Eastern, we have the EIA short-term energy outlook. It's going to impact US dollar, US equities, and gold. At 10 a.m. Eastern, the US JOLTS job openings figures. This is also going to be probably good. Impacts US dollar, US equities, and gold. At 10:30 a.m. Eastern, we have the Bank of England Governor Bailey speaking, which impacts GBP. So keep an eye on that. Don't forget about keeping an eye on what economic events you have and when those reports release. And we're still continuing to run with this bullish market optimism, playing the weaker US dollar, playing the weaker Japanese yen. To summarize, GJ, we're looking for pullbacks on the new daily candle to previous high buys or pullbacks to 152.500 buys. Gold, I'm looking for breaks above 1844 and candle closes above 1844 buys, or another new daily candle pullback to 1828. If we break below 1820, then I'd be looking to play this deeper pullback play. So I'm looking for this. If we break below 1820, then I'm looking for way better risk versus reward buys at that dip and retest of bullish market structure we've been talking about. But I would only be looking for intraday gold sells below 1820. Otherwise, I'm looking for pullback buys here, break above high buys here. I'd only take advantage of sells from 1820 down to 1800s and then look for buys here too. GBPUSD. GBPUSD, I'm looking for, because we don't have to go on the higher time frames again. You guys can see the higher time frame structure. You guys get what I'm saying now with those fundamentals and technicals, right? You have continuous highs being printed by buyers. You only have these pullback phases that don't break overall bullish market structure. You either have highs printed, pullbacks, and continuations, or you have highs printed, consolidation zones, and then continuations. Okay? So when we're looking at GU, I want to start targeting these previous high points, which is another 50 pips up too. Okay? On GBP USD, I'm looking for that pullback to come to retest previous intraday highs, because we were already catching buys in the private channel from this area. We didn't take anything because we didn't get good confirms here. I'm looking for the pullback to 1.4 and continuation back up. No, I am not a millionaire. But if I decided to market, sell signals, sell courses, you know what I mean, take advantage of people, I could have been a millionaire many times over already. But some of us got morals and ethics, you know, values. We played in Capital Hungry, we played these buys and these buys. But now I'm looking for a pullback to 1.21. Because I don't have to. Do you guys want me to show you the higher time frames on EURUSD? Do I have to show you? Because we know higher time frames are bullish. We know dollar is bearish. Our risk currencies are bullish. I want to target these previous highs. You've only had these consolidation phases and new highs printed. This was the last higher low that we still didn't break with this pullback phase here, right? So I want to start targeting these previous price points now. I didn't say anything about him. You just did. You're in my chat, bro. You're in my live chat fucking drooling over me and what I gotta say about the markets. I didn't come invite you here. People are fucking retards, yo. You're sitting in your Fruit of Looms, dirty as fuck, gaining weight with your man titties out, sweating, looking at marketers drooling after you paid them for a course, after you paid them for signals, they rob you, you don't make any money, and you still defend them because they bring you a little bit of dopamine hit through their posts. You're just a fat fucking loser, alright? Go work out, go eat better, go read about macroeconomics, go read about the financial markets. Do something productive with your time. Why are you on IG scrolling at marketers? Why are you even looking at these people like, that's why I did that webinar. That's why I did the retail traders webinar. To give people better expectations, to give people real world, the reality of the markets. But nah, you want to look at some guy's fucking yellow Lambo every other week. You want to look at his new bag. You want to look at his shiny ass forehead. And then guess what you got? A shiny ass fat belly. You look at his shiny forehead, and then you look down at your shiny fat belly. And your empty wallet. And your empty brain. And you don't even know how central banks work. You don't even know how taxes work. You don't know what an interest rate is. You don't even know what inflation is. So like, come on, man. Have some fucking, like, have some willpower. Have some belief in yourself. We all got the same brains. We can all learn anything we want. We can all shape our body how we want. Shape our mind how we want. But you choose to pollute it. You choose to pollute your mind, body, everything, your finances. It's fucking disgusting. I hate people like that, man. They're gross. Zoo animals. To me, it's a zoo animal. Alright? Anyways. Sometimes you gotta let it out, you know? Okay, so EURUSD. I want pullbacks to 1.21 and continuations up or breaks above 1.22. Alright? I'm not angry at the end of the day. Like I make to not be like, you know what I mean? Not to be rude. I'm physically pretty good. Probably physically better than 90% of the population. Financially better than 90% of the population. It's just statistics. You know what I mean? It's just the way the world works. Somebody has to be the villain and bring the harsh reality to people so they can wake up and just do their shit. I don't really hide shit like that. You can take my tone how you want. You can take the mean words I said how you want. You can take my aggressive attitude how you want. But I'm telling you to improve your body, mind, and finances in the proper way to do it. And I'm not telling you to go follow me. I'm telling you to go out there and do it for yourself. You know what I mean? And I'm either waiting for an order block formed below key level 1.20, 1.21 breaks below, or if we come back above the key level, a pullback to 1.219 continues sales on UCAD. All right, US dollar still bearish on the dollar index. Crude oil still bullish, which is a positive confluence for the Canadian dollar. Canadian markets are bullish like every other region. So I'm just looking for pullbacks if we stay above the key level to retest structure and continue sells. or an order block formed, something similar like this, below the level, and continued sells. And US 30, I'm waiting for the pullback to 34,600. If we don't break above this area, if we don't break below this area, I'm looking for a technical support at 34,600 and continued buys to these all-time highs. Yes, sir. There's no reason to fight. What's this? Novavax due to increase. Yeah, see, we're having continued flood of vaccine headlines. You know what I mean? We're just having a pullback towards the end of the day here. We've had just continued flood of vaccine headlines. There's been zero reason to sell the US stock market because you're literally trying to fight the Federal Reserve, and the Federal Reserve is the one who creates the dollar. You know what I mean? So I've just been same idea. Just if you look at the higher time frame structure, it's just like GJ, but it's just the stock market. You just wait for your pullbacks at previous demand areas and price sensitivity area buys, or break out above the high buys. Marketers are going to be loving this because they actually can learn something here. Novavax final analysis of Prevent 19. What is this? Fucking is that their vaccine name? My personal feeling is if you rant while trading, you have lost money. Bro, you guys are fucking retards. My personal feeling is you're a fucking retard. You guys think like the trading rooms or the dog pits when there was manual traders around, these guys are sitting there drinking tea and crumpets and talking polite to each other. Nah, they're going fucking wild over orders, being aggressive, unleashing their masculinity, and making that fucking money. You know what I mean? This webinar is intraday analysis to review the higher time frames, to review what's going on fundamentally and technically. You know what I mean? And then we do our live trading sessions during London, where we look to execute on these trade ideas. Listen, I'm probably in better shape and could beat the shit out of 90% of you. I don't have to behave myself. I don't have to talk in any sort of fashion or change how I talk. You know why? Because I got value in my brain. I got knowledge that nobody can take away. You can't tell me nothing. No, they don't have, words and feelings don't have consequences. Actions have consequences. You know what I mean? You came to here on my platform to listen to me, you fucking retard. You know how I talk. You know how I behave. You know how I am. I've had videos for a year, and you come here to listen to me. That's why. Pauline knows, yo. Pauline, the female in the chat, can you tell these little soy boys that they're not gonna be able to survive the markets like this? Holy, you guys are soft, man. You guys trade the financial markets. You know people commit suicide over these financial markets, right? Yeah, man, what the hell? I just gave you guys straight information for an hour. But anyways, everybody, I am gonna end this now because I don't want it to be too long so people can rewatch it. So, any questions before I go about any of the analysis, fundamentals, technicals? I was gonna do a live London session, but maybe not tonight anymore. Not really feeling these people. Not really feeling the YouTube community. I think you guys rather watch marketers. You guys should just go take some signals instead. That really works out for everybody, right? We've seen that work out through history. Any questions? Do I prefer London over New York for gold? I would, because you're trading gold against the US dollar, you do have generally stronger movements during New York, but every single commodity, currency, precious metal is constantly being traded by banks around the world around the clock, whether it's from high frequency trading or contract based trading. You know what I mean? Do you FAP? Hey man, sometimes, yeah. Sometimes mans get stressed, you know? I should try semen retention, eh? Do what? Oh, shit, man. I can't read some of these questions, man. You guys are spamming it. Slow down for a second. It says it bothered me. I'm not answering any social media. Technical or fundamental questions. If anybody doesn't have it, then I'm going to end this stream. Because this is just a market update. If you guys come to the Capital Hungry live channel... If you come to the Capital Hungry live channel, this is one of these webinars. So the live market analysis and trading sessions, those are usually 2 or 3 hours long, where we're looking at lower time frame price action to execute on pre-planned analysis. Does that make sense for everybody? These live market London analysis is when we do the stream during London volume, where we look to execute on pre-planned trade ideas with lower time frame price action confirms. This webinar I'm doing right now is the equivalent of one of these, which is a lot shorter, but we just review the fundamentals, technicals, a bit of the higher time frame, and you know what I mean? So this is like a live Asian market. I do Asian market updates, New York market update. The live market analysis and trading session, that is usually at London session, but it seems like you guys don't want me to stream, so I won't stream then, man. You guys don't want me to do it, I won't do it then, man. You guys want to go watch this guy? Go watch this guy. Go watch this guy point guns at it. I'm trying to teach you guys about hyperinflation and how to take advantage of economic cycles in 10 years from now and to generate wealth 10 years from now. But you rather look at a guy pointing a gun at a chart. Go ahead. Go ahead. All right. But if there's no questions now, technically or fundamentally, right now, then I'm going to end it. All right. So let me see this. Do you recommend any macroeconomic books? Good question. Just go to Google and put in university macroeconomic textbook, and tons of free ones will come up. I'm being dead serious. Capital, please. How can I learn fundamental? I don't know how I'm gonna treat it. What do you mean how you're gonna treat it? It's not a woman. Fucking guys, man. You bite your toenails. That was a good one. What's your outlook for gold? You can rewatch this webinar for that. How can we tackle deeper pullbacks on gold when it breaks strong levels? You gotta give me an example of a deeper pullback here. We haven't really had any deep pullbacks since about March. We've only had these highs printed. Like for example, when you have a push, look what I'm showing you here. Is it not exactly what I was showing you when I said, hey, you have a high printed, a 50% correction and pullback continue? You know the Fibonacci that these guys love to use? The 50% retracement Fibonacci or whatever the fuck it is? All it is an impulsive move and a corrective move, you know? But gold has just been running in this very nice structure, so we're just waiting for breaks above previous highs. I'm only looking for a deeper pullback if we come below 1828. But other than that, I want to take buys from 1828. Just you give a live example for your masculine webinar. Oh, this is a live example of the masculinity webinar. I told you guys, you gotta help each other. You gotta help your brothers grow. All the marketing stuff is toxic to them and toxic to you. But anyways, Okay, guys, I don't want to make this too long. Otherwise, it's going to end up being like an hour and a half, 2 hours, and then nobody's going to watch it. You can re-watch this right after I end it. These white lines are historical key levels. I'm not going to tell you my secret on how I map them, but you can see what the numbered levels are. And you can see the reactions to these levels as well. They're like cheat codes. On the intraday time frames, these levels are cheat codes. Look at this shit. 17, 6, like, and we've been using these same gold levels for like a year and a half, you know? So I'm not going to tell you how I map it, but you can look at them to use them yourself. Okay, everybody, if there's no questions, I'm going to end this. Please make sure you like and subscribe. Comment on this stream after. Like, subscribe, comment on the stream after. And I'll see everybody. Maybe if I do the London session tonight. It seems like you guys don't really want it, but it's all good. Maybe if we get enough likes. All of the Capital Hungry resources are in the description, as well as here on your screen. Okay, everybody, take care. Have a good evening, afternoon, good night, good morning, depending where you are. And I'll see you guys later.